Welcome back to Gold Rush Reporter, where we uncover the latest in precious metals, market trends, and insider insights for serious investors. Today, we're diving into something that could change the way you think about silver, its current price, upcoming market forces, and what it takes to be among the top stackers in the world. If you've ever wondered how far silver can go, or whether you're holding enough to be part of the elite, this video is for you. Things are about to get interesting, but first, let's take a look at where silver is standing right now. As of Tuesday, November 25th, 2025, silver is priced at $51.57 an ounce. It's holding steady above the $51 mark, even as market activity remains light, with Thanksgiving just around the corner. Gold, on the other hand, sits at $4,162 an ounce, up about $20 from yesterday, showing that even in quieter weeks, precious metals maintain strength. Looking ahead to 2026, analysts at major banks are starting to weigh in. JP Morgan Private Bank forecasts gold reaching $5,300, while Morgan Stanley projects a more modest $4,500. Bank of America is at $5,000, and UBS has revised its estimates upward multiple times, now predicting $4,900. The takeaway here? Analysts continue raising their targets as the market proves resilient. And there's a growing belief that silver could outperform gold in certain periods. UBS specifically notes that silver's lower price makes it more accessible to a broader range of investors, and its limited liquidity can amplify price movements when sentiment shifts. Silver's end-of-year target for 2025 is now $53, with 2026 projections reaching $55, and potentially testing $60 in the first half. Structural shortages, confirmed by the CEO of the Scottsdale Mint, indicate that the market has been tight for 5 consecutive years. Above-ground silver stocks continue to erode, driven by both industrial demand and emerging technologies. Solar energy alone is projected to consume 450 million ounces of silver by 2030, nearly double the current use of 240 million ounces. While industrial demand grows, financial market uncertainties add another layer of risk and opportunity. The Fed's next rate decision could dramatically impact precious metals. Analysts warn of the possibility of a tie vote in the Federal Open Market Committee, a situation that has never occurred before. If tied, rates would likely remain unchanged, even with Jerome Powell at the helm. However, current forecasts from CME Group's FedWatch suggest an 85% chance of a rate cut in the coming weeks, which could be bullish for both silver and gold. Finally, before we get into stacker rankings, consider the bigger picture. Silver is scarce, industrial demand is growing, and market conditions remain unpredictable. Whether you're stacking for wealth preservation or long-term growth, understanding these trends is crucial to positioning yourself for success in 2026. Now that we've set the stage with silver's current price and market dynamics, let's dig deeper into what could make the next year pivotal for stackers. One major factor is silver's industrial demand. With AI technology expanding and solar panel production projected to consume nearly 450 million ounces by 2030, the market is tightening fast. That's almost double the silver used in solar today, meaning the demand for this versatile metal is only going to grow. Even if consumer interest remains steady, industrial applications alone could push silver prices higher. Banks are starting to take notice too. UBS has highlighted that silver has the potential to outperform gold in certain periods, particularly because its lower price allows more investors to participate. UBS's forecast suggests silver could test $60 in the first half of 2026, even while gold hovers around $4,900. This is significant. Limited liquidity means that shifts in market sentiment can have an outsized impact on silver's price, making it more volatile but also more profitable for those who anticipate the moves correctly. The Federal Reserve adds another layer of uncertainty. Analysts point out that a tied vote on interest rates is a real possibility, something that has never happened before. If it occurs, rates would likely remain unchanged, creating a unique scenario for precious metals. On the other hand, CME Group's FedWatch tool indicates an 85% probability of a rate cut within the next couple of weeks, a development that would be bullish for silver. For stackers, this combination of industrial demand and potential policy shifts sets the stage for a market that could swing significantly in a short period. While the short-term market might see fluctuations, long-term fundamentals for silver remain robust. Limited above-ground supply, growing industrial requirements, and continued investor interest create a foundation for meaningful price appreciation. Even subtle changes, like a surge in AI-related silver consumption or increased adoption in new technologies, could create outsized moves for those positioned early. Understanding these market forces also helps you gauge how much silver you might need to be considered a serious stacker. While anecdotal comparisons, like weighing more than your dog, are fun, reliable sources suggest 50 ounces places you in the top 20% of stackers, 150 ounces in the top 5%, 500 ounces in the top 1%, and 5,500 ounces for the top 0.1%. These numbers highlight just how rare elite stackers are, but also how achievable consistent accumulation can be over time. Dollar cost averaging, even at just 1 ounce per week, can result in significant holdings over a decade. Silver isn't just a collectible or a hedge. It's becoming a strategic asset for both wealth preservation and industrial growth. Knowing how much to stack and when to act is key to staying ahead in a market that is simultaneously scarce, in demand, and poised for volatility. As we move further into the details, it's important to understand the different tiers of silver stackers and what it takes to reach each level. For most people, holding just 20 ounces of silver may seem like a decent start, but it barely scratches the surface. Realistically, owning 50 ounces puts you in the top 20% of stackers, marking you as a serious participant in the silver market. Moving up, 150 ounces elevates you into the top 5%, demonstrating above-average dedication and long-term strategy. The top 1% requires about 500 ounces, a significant accumulation that represents a substantial investment in silver's future. And for those rare elite stackers, the top 0.1%, the goalpost is set at 5,500 ounces, often referred to as the whale level. These numbers aren't just statistics. They're benchmarks that help investors measure their progress and understand their place in the broader silver community. Consider what this means for long-term accumulation. Someone who has been dollar cost averaging, buying just 1 ounce of silver per week for 10 years, would now hold around 556 ounces. That translates to roughly $28,000 at today's prices, assuming a current silver price of around $51.57 per ounce. This is a practical illustration of how consistency can produce results over time, even without access to massive capital. The compounding effect of regular purchases, combined with a steadily appreciating asset, shows why silver stacking isn't just about short-term gains. It's about building a tangible, lasting store of value that can withstand market fluctuations. Silver's dual role as both an industrial metal and a financial asset creates unique opportunities for stackers. With AI development and solar panel demand expected to rise sharply, the physical supply of silver is likely to tighten further. Above-ground stocks are being consumed faster than they are replenished, creating structural scarcity. This scarcity, paired with continued interest from institutional investors, means that even modest accumulation can yield significant advantages over time. The next few years could see volatility and price spikes that reward those who are prepared. Short-term uncertainty, such as Fed rate decisions or sudden market swings, is inevitable. Yet these fluctuations are exactly what create buying opportunities for those who understand the fundamentals. Knowing how to navigate these ups and downs while steadily accumulating silver separates the casual investor from the top-tier stackers. In essence, the path to building serious holdings in silver is clear. Stay disciplined, understand industrial demand, monitor monetary policy, and consistently add to your stack. Positioning yourself in this market now could determine your long-term success. As silver continues to gain prominence both as a hedge and as an industrial necessity, those who act strategically are the ones who will reap the greatest rewards. Looking ahead, 2026 could be a transformative year for silver, driven by both supply constraints and rising demand. The CEO of the Scottsdale Mint has already highlighted that this marks the 5th consecutive year of structural shortage in the silver market. Above-ground stocks are eroding, and new industrial uses, particularly in AI and solar panels, are consuming silver faster than ever. Solar alone is projected to demand 450 million ounces by 2030, nearly double current usage. And that's just one application. When you add emerging technologies and manufacturing requirements, it becomes clear that silver scarcity is not a distant problem. It's happening now. For stackers, this scarcity is a crucial signal. Owning physical silver is not just a hedge. It's a strategic move to stay ahead of industrial and monetary pressures. Meanwhile, macroeconomic uncertainty is creating both risk and opportunity. The Fed's upcoming rate decisions could have significant short-term effects, and analysts are watching closely. A tied vote, something unprecedented, could freeze rates and create volatility in both silver and gold markets. Investors who understand these dynamics are better positioned to capitalize on temporary dips, adding to their stacks when prices are favorable. This is where strategic patience becomes critical. Unlike volatile stock markets, silver stacking rewards consistency and foresight. Those who panic at minor corrections often miss the real gains, while disciplined stackers accumulate wealth quietly but steadily. It's also worth noting how public perception and media attention affect silver. Many casual investors underestimate its value, while institutional players increasingly recognize its dual role as an industrial metal and a safe haven asset. This recognition often precedes price spikes, giving informed stackers an edge. Understanding these cycles allows investors to position themselves ahead of major moves, whether by buying during temporary drops or holding during consolidations. Finally, community awareness and engagement matter more than many realize. By learning from historical patterns, staying informed about industrial demand, and monitoring Fed policies, stackers can develop a tactical approach that goes beyond simply buying silver. Engaging with forums, participating in discussions, and analyzing market trends provides a deeper understanding that complements physical accumulation. The combination of disciplined stacking, awareness of supply constraints, and timing based on macroeconomic signals creates a robust strategy for both short-term and long-term gains. In the end, stacking silver is more than a hobby. It's a calculated investment in tangible wealth. Whether aiming for the top 20%, top 5%, top 1%, or even the elite 0.1% of stackers, preparation, consistency, and knowledge are your most valuable tools. Those who act now, strategically and intelligently, will be the ones who benefit the most from silver's continued rise in both industrial and financial relevance. As we wrap up, Remember that silver isn't just a commodity. It's a key to financial security and long-term wealth preservation. Whether you're stacking for the top 20%, aiming for the elite 1%, or dreaming of joining the rare 0.1% of silver holders, discipline, timing, and knowledge are what separate casual collectors from serious investors. Understanding industrial demand, monitoring Fed moves, and staying aware of market cycles will help you make smarter decisions and maximize the potential of your silver stack. Keep in mind that each ounce you acquire now is not just a number on paper. It's a tangible asset that has stood the test of time. Structural shortages, growing industrial usage, and global financial uncertainty all point toward rising demand, which could make silver one of the most rewarding investments over the next few years. The key is to remain informed, strategic, and patient. Those who panic during minor corrections or ignore long-term trends will miss opportunities, while those who stack with purpose and insight will be poised for meaningful gains. If you found this breakdown useful, now is the time to act. Whether you're a beginner or a seasoned stacker, understanding where you stand in the silver hierarchy can guide your buying decisions and help you set realistic goals. From solar panels to AI technology, the silver market is tightening, and those who prepare will reap the rewards. Thank you for tuning in to Gold Rush Reporter. Don't forget to subscribe, like, and hit the notification bell so you never miss our latest insights, market updates, and exclusive analysis. Share your stacking journey in the comments below. Let us know if you're in the top 20%, 5%, 1%, or 0.1% of silver stackers, and connect with our community of informed investors. Stay vigilant, stack smart, and remember, the best opportunities often come during moments of uncertainty. Until next time, keep building your stack, stay informed, and we'll see you in the next video. Gold Rush Reporter, your guide to silver, gold, and sound money.